Okay, let's move on to the following questions. This is in relation to financial accounting, ACCA financial accounting FA. The first question is, an inventory record card shows the following details. February 1st, 60 units in inventory at a cost of 12 per unit. So this is the opening. This is the opening stock value. This is the opening stock value, 60 units at the rate of 12. Okay, so we can take 60 units at the rate of 12. This is the opening balance. Then on 5th February, 100 units purchased at the rate of 14. So this is the new addition, the purchase 100 units at the rate of 14. Then sold 80 units. 80 units were sold. Now we don't know at which rate this will be recorded. This will be depend on the stock valuation, the stock method that they use. Then on 18th February, 40 units purchased at 16. This is sold, and this is the purchasers again 40 at the rate of 16. Then again 70 units were sold. Okay, again we need to identify what is the stock valuation method. Based on that we need to issue. What was the value of inventory at 28th February using the first in first out method? So they use first in first out method, FIFO method. Okay, so based on that let's calculate. Now 60 units at the rate of 12 and 100 units at the rate of 14. So the total quantity available, 60 at the rate of 12 and 100 at the rate of 14. Okay, now from this 160, 80 units sold. 80 units sold. Since we are using, then the balance will be 80. Since we use the FIFO method, okay, of this 80, 60 will be issued from this quantity, and the remaining 20 will be 60 from this particular stocks and 20 from 100. So the available 80, this available 80 is from these stocks, which is at the rate of 14. Okay, then again they purchase 40 units. So you had 80 units at the rate of 14. Now again on 18th February you purchase 40 units at the rate of 16. Now you have available stocks 120. Sold 70 units. Now you have balance of 50. Now this 70 units will be first issued from the first available stocks, which is 80. Okay, so therefore this 70 will be issued from this 80. So therefore out of 80, 70 when you issue, the remaining stock will be 10 at the rate of 14, and you are left with this 40 also, 40 at the rate of 16. So this will be the closing inventory value based on the FIFO method. So if you take 10 times 14, 140, plus 40 times 16 will be how much? 640. So therefore the total will be how much? 780. So your correct answer will be 780, the last one. Okay, this is the answer for the first question. Now let's move on to the next question. Stationery paid for during the year amounted to $2,200. At the end of the year, inventory costing 150 had been received but not yet invoiced by the supplier. At the start of the year, there was an accrual for unpaid stationery for $120. So what was the expense for stationery included in the statement of profit or loss for the year? Now if you take the stationery expense accrued account, okay, this is the T account. This is the T account. Okay, stationery payable account. Okay, So what they are saying is stationery paid during the year amounted to 2,200. So when you pay, you credit bank account. Okay, you will credit bank account, you debit the stationery account. Okay, so here the bank account will be credited and here the expense payable account will be debited. At the end of the year, inventory costing 150 had been received but not yet invoiced by the supplier. So that means this is payable. This is the payable to the supplier. So therefore, since it is not yet paid, what you need to do, you need to carry forward this balance as a payable balance. Balance carried forward 150. So this will be the balance brought forward 150 to the next financial period. At the start of the year, there was an accrual for unpaid stationery 120. So there was an opening balance brought forward of 120 payable. So what was the expense for stationery included in the statement of profit or loss? So when you take this, that will be the profit and loss charge to be charged to the P&L account. So here you will credit and debit the P&L account. So when you take the total 2,350, 2,350, and the amount will be 2,230. So this is the answer for this particular question. The amount to be charged to P&L account is 2,230. So let's move on to the other question. The other question, let's go through the question. AG's machinery cost account showed a balance of $7,500 at 1st January 2015. Okay, so this is the opening balance. During the year, AG had the following transactions. 31st March, disposed of machine costing 450. Then 30th June, acquired machine costing 1,800. 31st October, disposed of machine costing 750. AG depreciates machine at the rate of 12 per annum on the straight line basis based on the number of months ownership. What was the depreciation charge in respect of machinery for the year ended 31st December 2015? Okay, now they charge depreciation based on the number of months of ownership. Okay, so therefore if you take the opening balance 7,500, if you take the machinery account, there was an opening balance 1st January 2015 7,500. This is the opening balance, brought forward balance. And 31st March, machine worth 450 was sold. So 31st March, the cost will reduce by 450 on 31st March. And on 30th June, acquired machinery costing 1,800. So on 30th June, they acquired, okay, so they would have credited bank account or the payable account. So let's say it is paid by cash, so bank account, and here 1,800 debit. Again 31st October, disposed of machinery costing 750. 31st October, sold 750. Okay, now when you calculate the depreciation on straight line basis based on the number of months ownership, so we need to calculate, for example, now on 31st December this 450 was sold. So if you take the number of months these assets were held in the company, 450, this particular asset was held for 3 months. So therefore this has to be calculated for 3 months at the rate of 12%. Then if you take this particular asset 750, 31st October 750, this particular asset was held for how many months? 10 months. So therefore for 10 months you need to depreciate this particular asset. Then in addition to that, company has bought 1,800 on 30th June. So 30th June, additional asset was acquired 1,800 at the rate of 12%. Since this was purchased in June. for 6 months. We need to depreciate for the remaining period. And the opening value of 7,500. Then the opening value of the 7,500. Okay, the 7,500. This was the opening balance from 1st January 2015. So of the 7,500, they sold 450 and again they sold 750. If you take the assets which were held throughout the year, what is the value of the asset that was held throughout the period? 7,500 minus 450 minus 750. So that amount will be 6,300. So the total 6,300 remaining asset value has to be depreciated at the rate of 12% for the full year, because these assets were held throughout the year. Okay, so basically this 450 we need to depreciate for 3 months, because this particular asset was sold on 31st March 2015. So therefore this was held only for 3 months. Then subsequently on 31st October 750 worth of assets were sold, and therefore these assets were held in the company for 10 months. So therefore 10 months depreciation has to be charged. And in addition to that, on 30th June they bought a new asset worth 1,800 that was bought on 30th June. So therefore the remaining period will be depreciated. So therefore only for 6 months we need to depreciate. Then the remaining asset value, which is 6,300, has to be depreciated for 12 months period, because this was held throughout the period. Okay, so when you take the depreciation for this 450 for 3 months, so that will be 13.5. Then 750 for 10 months at the rate of 12, it's going to be 75. 1,800 times 12 times 6 months will be 108, and plus 6,300 times 12%, which is going to be 6,300 times 12%, 756. So 756 plus 108, 75 plus 13.5. So the total depreciation amount will be 952.5. So this is the answer for this particular question. So what was the depreciation charge in respect of machinery for the year ended 31st December 2015? It's going to be 952.5. So this is the answer for this particular question.